welcome to the weekend review of what we're expecting for next week in the markets. I'm going to start off with a fresh chart here. And we'll break it right down from the weekly, as I see it from a weekly perspective, all the way down into a, let's just clear all this off here. I'm going to start from the month. I'm just going to kind of draw out where I see price going. Right, so monthly, we still have this fair value gap down here. We've yet to revisit. We've got a premium box already taken. And I'm looking for, we've got another fair value gap. So we haven't retapped this yet. We're still going higher. If we get back through this, then we'll start hunting these extra little ones down here. But for now, let's just go for a weekly. Put some lipstick on the charts here. The weekly chart. As you can see, there's a slight imbalance up here already. This is the volume imbalance in the weekly chart. It's called and we have this little imbalance down here. That's what I see in this immediate discount premium now. The equilibrium. Call that EQ weekly. So if we come back into that, oh no. And it's no use putting all this stuff in there yet. We got to get past, in order to get down to all this stuff, we got to break these, we got to break that mean threshold of this last down close candle. We wick through it. So if we come back through it again on a close, then I'll be looking for the rejection block and this breaker. I retouch this old breaker, and then perhaps I run back into this ISA here. That could be a couple of weeks away. So daily. Let's be the daily inversion. Now ran through it. We've tapped it. We've pushed lower for this discount box. Into the discount there, and the daily. Mean threshold. It slows down close candle. So we're bouncing off that. And this is going to put this as the bearish. And this is the bullish. I'm just kind of marking out all the charts here for the levels that I see as premium and discounts. Between those two right now, and this premium and this discount, inside that small range right now. And the daily equilibrium is right here. So we're sitting right on the equilibrium for the daily. Let's just put a little lipstick on the pig so you guys get an idea what it's like to chop it all up. Yeah, see how you've got overlaps here? You've got this one price imbalance, or so your volume imbalance over here, and a little price imbalance there. Didn't quite fill that in. And then you've got this CIVI overlap. So they're all kind of overlapping this whole area here. So when you're looking for this to retrace back, come back in between these two and back into the consequent encroachment, which would be like a mini what do they call that? Event horizon between these two particular points. That'll put you right in the middle of a 1, 2, 3 different entries for continuation on a long, on a daily. So I've hit this level. If we get a retracement into Monday and trace back into this fair value gap, I'd like to see it just tap this, or at least get into that consequent encroachment of this, and then start moving higher. If we get below this level, we're looking for a run lower. if we just use this level of support, I don't really want to see it close below 23,366 on the daily, and then start pushing back up again. So if we're in between here and here, if this is a rollover and we're looking for these lows to get taken again, I would like to see this level right here get closed below, come back, find support at it first before actually running down and taking out those lows. And let me just make sure we where are we here? Oh, we do have some people watching this morning. Hello and hello. Yours turned up. There's a couple of you watching. Now I'm just kind of looking for the next level down. So we're already past the equilibrium, or at the equilibrium of this daily. This SIBI is open for us to run back to as a draw. So we get an opening on Monday to come back into here and then push higher for Tuesday, Wednesday. Good morning, Liquid. Deacon Ryu, yeah. Thank you for taking the time on your Saturday. Appreciate it. You're very welcome. So we're looking up here, Liquid, for this upside for the premium box, discount box. Inside this range, I haven't marked out the discount just because I didn't want to interfere with these two here, but we've got this discount box here. You're inside this range. So if we come back to the discount and look to go higher, so we'll be looking for a lower time frame, hourly, 15-minute, 5-minute, for an area down here that would support price running higher. And if we break through this, then we're looking for a run on these lows and a break through this mean threshold daily. If we can get through that, then we're looking for a run on these equal lows below us. So you got equal lows here and equal lows here. So there's still lots of liquidity sitting below us. This has all been made jagged now. So if we do get a retracement back into this candle, which we have already, and we've had a little pullback, I want to check as we go down now. I'm going to look for a 4-hour, 1-hour reversal already occurring off of this level. And if we see a 4-hour or 1-hour reversal, I want to see that still holds. So I can retrace back into that 4 1 hour on a 15-minute or 5-minute to catch a continuation on the downside, aiming for here. That's what I'd be looking for. So I'm looking in, as we go down now, I'm going to start looking to see if there's a turn that's occurred here off of this candle, which is a perfect level to see it turn. So that's the kind of that's where we are in terms of the zone, and that's where we are in terms of the higher zone, or the higher leg, and the smaller leg that it's forming right now on the daily. And we think that's still 300 handles, so it's still quite a lot. Okay, so here we're looking at the 4-hour now. This is all monthly stuff down here. So we've had a change in direction off at that top level on the 4-hour. We've had that high taken, and then we're looking at this candle here on the daily, and we're looking for anything that shows us that there's a reversal going on here right now off this little breaker that takes out these highs. Okay, this one's buried inside these two, so you have to take both of them. So we retraced back into this. We've retraced right back into the mean threshold of this candle, and we filled this fair value gap. So now that's a place where you could like to see, I'd like to see a reversal here for a rollover and go back down. And as you can see, this immediate rebalance we have here, it wasn't tested. This old high consolidation for a CAM model wasn't tested. This next fair value gap you see right here, and the candle to the left of it, it was taken, and we ran above that. We never came back to that either. So all this area here has just been totally ripped through and sent higher without giving you an opportunity to catch a ride on a 4-hour chart, that is. So as we see here, there's a fair value gap, which you always hear me say, I'd like to see these things occur with a fair value gap above an old high. And then I want to see so we've had that happen here on Friday. On the last 4 hours of Friday, we had a nice little fair value gap that formed in here. And as that fair value gap forms, the next thing I'm looking for is a graded response here. So this graded response is going to be down to, and we're expecting an area of resistance. So I'd like to see this tap here. And if this area is going to give way, which is going to be right here, putting lipstick on this pig here, I'm looking for this. If we do get a little pump up and we get a bit of a wick going on here, I'm going to be looking for this level right here. So this will be what I will call, this is called the 4-hour go, no-go line. Higher or lower. And the reason for that is this here, we haven't traded below it except for this candle, and we never retested it. So now we're coming back. If we do retest it, let's say tomorrow opens and we go straight to it, and then we come down, tap this, and continue digging into this. I'll talk about this one in a second. But if we run up, I want to see if this holds resistance. So we come up and tap it, you want to see it kind of roll over and start coming back down again, and then see if we start to work our way through this level. And if we get into this busy, I want to see a graded response. So if you want to go high, you're looking for, so you take this into quarters. Ollie, good morning. The 10 a.m. candle did a market reversal on its own. Yeah. So what we've got here is, I'm looking for a graded response. So we're looking for 25%. That's your first. If we open and go like this, dip into here, the institutional order flow entry drill, and we continue to go higher without tapping these lows, because I'm looking at this right here, still doesn't come back into this little volume imbalance. If we get an institutional order flow entry drill and it goes higher, this is the first objective I'm reaching for. And if I lose this first objective, just waiting for this commercial, just wait for that commercial to end. Okay, so if that first objective gets traded through, then I'm long for the premium array. So I'm looking for this level right here, this bull trap, to close above it and then get on top of it and then start looking for a run into this premium box here. And if we get through that, then I'm looking for this little area and then that little area right there. So those would be like my areas I'd be hunting for with, and you got all these bull traps that are potentially blocking the way. So it's not a smooth run up there. So I'm expecting to see some sort of resistance here. So as we dig down, we're going to continue to dig down and see if this reversal has occurred here, all the way down to a 1 minute or even a 15-second chart. We'll see if this is turning to a reversal back down lower now. So we can expect this to continue coming lower. Good evening, Mr. Ollie. I guess it is evening over there, isn't it? It's 7 or 8 o'clock at night there. Where was it? Okay, yeah, so this graded response would be institutional order flow entry drill. Your B level response would be right here off this old high, or this 50% consequent encroachment, which lines up nicely with this little breaker we got here, little swing breaker. Send it lower, takes out that low. So I want to see that hold. Then you got right here at the mean threshold, which is 75%. It can come down there. That's the C level response. And then the D is the full fill, which you don't want to see because now you're breaking through here. So now we're looking for probably a run down to this SIBI again that we never got tapped in the first place. So that's my response. So when you get down, coming down into this level, the thing you look for next is, do we have a 15-second reversal that confirms that that level has been hit? So get ready to that 1 minute level and you start looking in the 15-second level and you look for the reversal and you say, good, now I'm seeing that there's a sensitivity there. Catch that for a run higher. If it reverses on you again, it comes down, you'll see it on a 15-second chart. Okay, or a 1 minute chart. And then once it breaks this mean threshold or this rejection block here, and we're looking for hunting this area up here again. So for a quick run on liquidity, 50% there, that's 436 to 6. That's like 200 and some odd handles. So there's a lot of juice there to get out of that potential run. So all these different strategies you're kind of looking at for particular setups and looking for a confirmation. So again, keeping on the theme of do we have a reversal off of a higher sensitive or higher time frame key level? Let's go down a little deeper. Sorry, let me just make sure I got all that 4-hour stuff down and this overlap here. So we know 50% of this is going to be the top of the breaker. Okay. If you really want to put all the lipstick on the pig, this is really going to look kind of choppy here. So if we go like this and put breaker. Oops. Why does it erase that? Not quite sure why it does that. All right, so that's the downside. I'm expecting to see a retest. And then we're seeing if we're going to come back to a CAM model 1 here. The worst case is CAM model 1 for continuation. You want to see a piece of this stay open still. If it comes down. If it keeps going higher, looking for that. If we break through that, looking for continuation. So as we continue going low, let me just put the premium one in here just so you can see it. So that's the premium. Premium 1, because there's a premium 2 up here. Okay. Does that make sense there so far, Liquid? In terms of where we are inside this range, we're already at 50% of the equilibrium of the whole range. This is the weekly equilibrium just below us. So we're in the premium portion of the weekly. We're just above the premium, or just into the premium portion of the daily price range. And there's your daily mean threshold discount candle. And there's the daily mean threshold premium candle. All right, so let's go down. So we're still hunting for this reversal. So hourly chart. Keeping in mind our reversal. So we have a sweep of a low. If you don't get a fair value gap, which there might be a little tiny imbalance in here somewhere, if I stretch this right out here. Is there one sitting there? Yes, there is. A little itty bitty one right here. And you got to stretch it out. You got to look at it, because if you don't, you miss it. Because there's the pop above, and look at that, right back, give it a little kiss. And you didn't see that when we're all squished in here like this, right? You may have missed it. But right there, entry along, you want to see the bear trap give away. It does. And now you want to see this hold, this whole little area here, you want to see it hold price before coming all the way back down into here. Or you get a fair value gap here that forms above that little swing point. And you may look at that or say, no, I want to see institutional order flow, or I want to see market structure shift up here, or maybe even up here. That's entirely up to you. I just look at the candles at the left, and I want to see that retested or that high broken. And then I look at this level here, this whole 3 level candles, and I say, do we get a run above there? We do. We get a run above that level. Now you want to see, ideally, you want to see it come down and tap it. It works through the mean threshold of that up close candle there, and you go, if it does, it's reaching lower into this range. It wicks through it once and then gaps, and then goes right through it, closes below it, and you go, now I know that we're going to reach down deeper into this range. So look for this candle or that little fair value gap there, which has already been hit. So it comes all the way back down, taps this, goes higher. Even if you left that there and said, I'm going to put my stop loss just below that simi, or that imbalance down here, and let it run, that's fine. So you run above, you put your stop loss all inside here, because you take this breaker right here, this parent breaker, this whole run, and stretch it out, you'll see that we still stay inside of it, right? So even if you're not looking at this one, and you say, I want to see it stay inside these 3, so your stop loss goes 1 tick below that low, then you say, look, we came all the way down, give you a bit of a scare, a little squeeze, and then all of a sudden she exited stage north on you, right? And then you never got an opportunity anywhere inside here on an hourly chart to catch that huge run at 10 o'clock, right? So you say, look at this SIBI over here. This hourly SIBI has never been traded back into. So your idea is, do we get a chance to get back into this? If we don't, there's a strong likelihood before we take any highs that we're going to come back into this area. Or if we do and we start to retrace, look for this area and this SIBI to get retraced or return back into. So here's our first hourly level, that premium 4-hour area we're looking for, this guy right here. We've hit that, we've had a nice response off of it, but we don't have a reversal setup going on here. We have eaten through the mean threshold of that candle. We haven't retaken the highs. I don't have anything in here. So right now, still bullish. Still looking at that 4-hour go, no go line, right? So on the hourly, you want to see it break this candle's low and start heading for all of this, 50% of that inside that breaker we talked about on the 4-hour, all those little areas that we're looking for, right? A retest, and then we're going to watch on the lower time frame to see if it starts to move forward higher, or we still catch this and still keep on riding this all the way back down again. So get into your 15-minute chart. And now I start to see some things starting to change up on me here. So we've got that high in that area, higher time frame area that's hit. Now you look for on a 15-minute chart, you say, do I have a change in direction here? And I take this right here, and I'm looking for a BISI, not a SIBI really, that gets broken. So here's our, and I'd like to see a BISI form after a high is taken, not below it. So this is kind of not the typical thing you'd like to see. So on a 15-minute chart, put this as a 15-minute inversion, fair value gap. because we traded through it, tapped it, come back to it again. See that? We ran through it. You've come back through on this side, come back, hit it one time here, and now you've pulled back through. Now you've got a BISI here and a BISI here. This BISI and this one. So if we want this one to go long, we want to see it stay on top of that and start climbing higher. Just wait for this. We want to see this stay on top of this and climb higher. All it gives you is rejection block. Pay yourself a rejection block. See? Comes back, taps it. Good. Pay yourself a little bit there. Move to break even. If it comes back, taps you, then that's the rule. That's the basic rule. And again, you may not be into that because it's so close. But typically, you might say rejection block up here somewhere, and it'd be worth the run. That you may not look at it as a run, but the rule is as soon as it gets there, pay yourself. Move to break even. So anyway, it comes to that downside of it. You get a body break through it, and it taps it. That says I'm going to come back deeper into this range, and I have a BISI right here. That BISI right there is what you want to say. Now I want to see this get broken and find support at this. Well, the one that we wanted to see go higher has now been broken to the downside. And now we've got one that wants to go lower. It's also broken to the downside. And you want to see it come back, find support at this, roll over and come down lower. And then you want to see this one break. That one's confirmation we're going lower. This one's confirmation we're going lower. And this one here, you break that and take out this mean threshold. We're looking for a run down below these lows. So now we're looking for that higher time frame PD array that we saw. We're seeing slight change in direction in the state of delivery. Now I want to see whether or not we break this market structure on the downside, find support off of this, and now I'm short back into that higher time frame objective, which was somewhere in the consequent encroachment of that 4-hour candle, and reaching for those old highs. So you see the logic of that there. So now we've come back right here, draw it out. See how we've tapped it? So now you want to see this kind of roll over here. So today or tomorrow when it opens up, and the markets open up, I want to see that gap down. If it does gap higher, this is the area I got. That's what I want to see it tap there. And then I'm looking for this whole reversal thing down in the lower time frame all over again here. And then you wait for market structure shift below these two levels here. If it gaps higher. Because now the narrative is not supporting a lower price. Right now I see a slightly lower narrative, even though we're in this consolidation. I want to see this 15-minute fair value gap and this 15-minute fair value gap and this 15-minute, that little triangle right there. I want to see that giveaway, take that spot right there, which it keeps bouncing off of. You see the body's respecting it. I want to see that get broken to the downside, come back, find support at it, because it is also, what is this thing? Look at that mark, there's something there. I think it's the, yeah, I think that's the mean threshold with a bullish candle on the daily. That's what that one says. So yeah, I want to see that support this and keep coming lower. If it gets above there again, changing my mind, I'm looking for this area. Right now, I'm looking for this continuation of the downside, and I want to see this mean threshold get taken, and that little BISI below you, I want to see that close this time below here. Then we can use that for support to come lower. So on a 5-minute, you want to see that should show on a 5-minute chart. So now you think that this is the range you're in a 5-minute chart, and this is the range you're in a 5-minute chart, and this one, and you see how it's compressing. It's getting smaller and smaller until it has to bust out of here. So it either breaks higher or breaks lower, takes these lows. So there's a small little change in direction here after not taking an old low. This one did take some lows, and then we've got a change in direction right here. That's the 5-minute right there. See that? So that's our discount box. And our premium is right in here. So you've got that civvy here still. There's the breaker. Well, not really a breaker because this one would be the parent breaker. Yeah, unless you look at that swing point there, then you say, yeah, I broke it. But these two up close candles here, I'd be looking to see those. Price right at their, so you take the bodies only, right at their consequent encroachment, add the two together. That's where we're sitting. So that's the strength you want to see. Hold price, reverse, take this candle out on the downside, wait for it to close below it. I want to zoom in here so you guys can see this. This is the area of interest right here. Sorry, that's not sitting right on there. Let me just turn this into an area of interest and you guys can see exactly what it is I'm talking about. This is the precision you want to see. So you want to see that hold. So it holds right there, perfect. Keeps coming lower. And then you want to see a fair value gap here get broken on the downside. So there's your fair value gap, BISI. The BISI gets broken because what we're doing is we're hunting for liquidity inside this range. So this is a premium BISI hunting for a discount city, this guy here, right? There's the pot below. So there's a body that trades below it. You trade back into it. That's a short right there. You have 1, 2, 3 shorts. If it closes back above that, wait for market structure shift because now it's bouncing back and forth and it's not worth going. Now I'm going to go long. Now I'm going to go short. Now I'm going to go long. So my rule is I'll do this once. And if it trades back through me, I wait for the higher or lower levels to get taken. So I'd like to see it trade back through this level, take out that high, and then get back in sync with the market to go higher. In this case, you would have caught it short right there. And now we're aiming for inside this range. If you pull your fib tool from low to high, and we start saying, I am going to hunt for take profit model 1. I take profit model 1. So I'm in here like this. So my stop loss will sit just above this high because I don't want to see, I don't want to see this BISI get taken to the upside, right? So I don't want to see wick. I don't want to see anything get through that. I just want to see it can tap it. So my stop loss is going to be just above that level. So I want to see it go down, come back up, hit it, go short. Now as it goes short, as soon as it hits 50% right here, you move your stop loss to break even. You take half your trade off because we're only hunting internal range liquidity. And then we wait for it to continue. And then all of a sudden it speeds up, gets to 65, quickly move, take 10% off. But this is take profit model 1. Take 10% off, move your stop loss to equilibrium. Then it runs to 70. Take another 10% off, move your stop loss to 60%. It opens and then goes bang to 79%, hits right in the level, close your trade. You would have had a perfect entry for a perfect exit right there. And you would have scaled out on the way down, pay yourself all the way down. That's a take profit model 1, right to 79%. It would have come back and cleaned you out at 70%. So you would have maximized all your scale outs on the way down. If you did a take profit model 2, which is just taking from BISI to SIBI, you would get your entry in here, you load it on, and as soon as you got to 50%, move your stop loss to break even and go risk-free and let the trade continue. And as soon as the trade hits 1, 2, 3, you scale out 1, 2, 3, and you're done. That's take profit model 2. Okay, does that make sense? The 7 of you that are in here, does that make sense to you guys? So that's a take profit model 2. This is my box-to-box trading setup. And then you look for a change in direction to confirm, hey, look, are we coming back into this range again? And are we hunting for that premium box, so box to box to box? This is when you're in consolidations, back and forth, okay? Thanks for the acknowledgement there, Liquid. So as you see right here, we have our key level we're looking for right here, not a higher time frame. We're just hunting internal range liquidity, that's all. So from here, that was a 590 right into 533. So you would have had 57 handles in 1, 2, 3, 4, 5, 6, 7, 8, 9 minutes, 10 minutes tops. You would have had 60 handles. That's what most people get in a day. You get it in 10 minutes if you just follow that model and follow the rules. Then you see this reversal. So now we're going to go to the take profit model 3, okay? And that is, as soon as I see an entry, an opportunity to get in, okay, I look for the first opportunity. If I don't reach my objective, so you would have reached your objective and you've been done. But let's just say you're doing pure model 3. So you're saying, as soon as I see a reversal, in other words, I don't care about this. I want to see it rip all the way through here, and I want to go balls to the walls and just keep charging down on this thing, right? So as soon as you see this level right here, we're going to go from BISI to the next forming SIBI. That's take profit model 3. So if I'm going down here like this and it's coming down and I see this level occur. So now I say I've got a SIBI occurring. I've hit this key level. I'm expecting to see a SIBI occur. And the moment this body trades above that SIBI, you can do one of two things. One, as soon as it closes there, you're out. Stop your trade right there. Okay? You'll see it run up here a little bit, freak you out, come back, stop right there. Okay? Trade's done. So you're out here instead of down there. Again, doesn't matter. You're just following take profit model 3. Now, as soon as that goes there, you say, so that's the first thing you can do is close it out right on the close if it goes above that candle's low. And then you say, or you can do a more wily way. If you trust it enough, you go, as soon as it trades back into this box, I'm out. So as soon as you go see it hit there, or the consequent encroachment, or the mid, or the bottom of the SIBI, I'm out. And it comes all the way back to the bottom. So you close your trade off there. Now it comes back and stops, and you go, sweet. Now I'm going to get, if you're really ballsy, let me wait for this commercial to end here. If you're really ballsy, you say, now I'm going to go long because I'm following the SIBI rule. I'm going to go long. So as soon as it comes back into there, you catch this for a long. Stop loss will sit down here. And the moment it takes out the bullish candle right to the left, you always look to the candle to the left. As soon as it takes that mean threshold out on the upside, you go, now I know I'm running for the high. So I'm going to pay myself at rejection blocks. It goes from here, you catch your long, hits the mean threshold, pay yourself at the mean threshold. It goes through it and you go, sweet, pay yourself a rejection block. Now, if it comes back into that mean threshold right there, I'm going to catch that and hold that for a long. My stop loss will go just below that tick, a tick below this candle, because this has to hold price now. You've heard me say it before. If there's a body that closes above this high, the mean threshold of this candle should hold. If it doesn't, and it starts to let go, look for a revisit back into this guy here. I'm giving you guys some real gold today. So look at how we got, 6 people in here. So watch this level. It's holding. Now what are you looking for? A retap of the premium box again. So you've gone from box, this box to this box to that box. Now if we get through that box, I'm looking for a run on the liquidity above here, and I'm looking for a run back up into that higher time frame go no go line. So that has to hold. So today, depending on where it gaps now, you say to yourself, do I gap below this level and then come back into it? That gives me confirmation. I see we're going to keep coming lower. So this is my opening. Where's my opening of the day going to be on Sunday? Above or below this spot? If it's above, look for this. If it's below, look for that deeper run down below you here, because that'll be the holding point for me right here and over here. And there's a little tiny imbalance there that's all buried inside that one. So we just wait now just to get further confirmation. We have the 15 minutes telling us that we're slightly bearish, the 5 minutes telling me slightly bullish. So now we got a contradiction. We've got nothing on the 4 hour except for we've hit a key level that we want to see a turn on. An hour hasn't given us anything for a confirmation. A 15 minute has given us a confirmation of slightly bullish. And the 5 minute is giving us an indication of bearish. And the 15-minute level is in a consolidation, as you can see here. So now I've got 15-minute saying, yeah, we could be going lower, or yeah, we're going lower. Hour says, I got nothing that says I'm going lower. And 4 hour says you've hit a key level. You want to see this go lower now. And then you see a 5 minute that says, no, I'm going higher. So one's going higher, one's going lower. And then the 1 minute will probably tell us we're still going higher anyway. So we're inside this range. So we need to get below here. So we got the 15 minute, the 5 minute, and the 1 minute entry into here that gives me 3 little levels that give me confluence that we're probably going lower. And that 4 hour area that we hit was a primo area for a retracement. Typically, you'd like to see it hit that level on a 4 hour, and you see a nice clean breakthrough, clean price action, and just go. And you don't have all this crap. You just see it on a 15-minute, 5-minute chart, 1 minute chart, and away it goes. And you go, yep. In a minute, you'll see it on the hourly, and so on and so forth. Good morning, Hans, or afternoon, Hans, wherever you're at. So do you understand what that level is there? Liquid, you see how we're kind of just drilling down from an area of a sensitivity, and we're drilling down through the time frames, and now we're seeing we've got confirmation, nothing on the hourly. We do on the 15, we don't on the 5. Unless you look at the overall range, that we are below this level. So we've come back up to a premium portion of this range. We've dropped down, and now we're coming back up to just bounce off of that and then roll over. But inside this range, you're bullish. So until the 5 minute gives us a break in market structure that gives us this level, or this level, if we can break through both of these, if we gap down, I'm looking for that level right there and there, those two, to give me confirmation we're going lower. Ideally, it would be tippy tap this sucker right here and just keep coming. So that's what we're looking for on Sunday. Does that make sense? Does it sound logical how I've kind of broke that down so you guys can see the method of my madness here? Yes, no, anyone? Anybody have any questions on that? That narrative, that setup, that what it is I'm looking for there? I'm not looking for SMTs. I'm not looking for any crazy, I'm not looking for it, not crazy. I'm not looking for anything else other than those specific data points. And I'm not trusting anything else. I'm not trusting SMT. I'm not trusting, seasonal tendency says, there's a Jackson Hole summit going on. Yep, I get that. And I think we've seen the low. If we do, we've seen unusually high runs. Usually you see a seasonal low in July and August, and we haven't really seen that. They just keep pushing for new highs. So this may be that inverted market where you just keep seeing things popping up higher and higher. And the Jackson Hole just keeps pushing the market higher. I'm not sure about that right now. I like to have seen, I'd like to have seen a big drop down on the daily, give us a nice little low into this third week, and then push higher. But who knows? This is what I'm looking for. That's how I drill down, and I'm looking at those specific levels, because I know it doesn't matter if you give me SMT. It doesn't matter if you give me all those other news events. You will see this level break. I'm on the wrong side of it. If this is going to go lower, I've got to break here. And if it's going to go higher, it's going to break here. And then if it keeps going higher, it takes out this level, and then that level, then I know it's going to continue going higher. I'm going to continue to support that. None of that other stuff worries me at all. I look at exactly where the chart's sitting right now, and you can see how it acts based on these key levels, all the way down to a 5 minute, and then if we go into a 1 minute chart, you'll see the same thing repeated over and over again that we look for every morning. Okay, so that's how you kind of drill down from monthly all the way down to a 5 minute chart, and where you expect to see your first change of direction. That was on the 4 hour. And we still have one more little 4-hour objective up here that we could reach for. So you're in a consolidation. Let's just wait and see what we get on the opening of the week. Questions? No one? All right, let's go into, so that's where I'm looking for. So you kind of write those levels down and put go, no go line is between 668 and 688. That's the go, no go line. If we get above it on a close, then we're looking for higher prices, looking at the weekly objective. And if we go lower, then we're looking for, if we close below here and then here, then we're looking for a run back into that 4-hour consequent encroaching and old high back here. Right? And those are all like 100 and some odd handle runs. So they're worth the chase. If we can get below that level, come back into it. You want to see a nice big displacement candle here, pop back into that. Don't chase it, just wait for it to hit it. You see that nice little displacement candle down or a gap down, trace back up into here or here, and then just let it run. Let it run back down to here. If it closes back through that level again, you're on the wrong side of it. You're on the wrong side of it. It's going to go back higher. Even if it opens down here and then trades back through that, that's just a run on liquidity, and it's just going to run back up and look for the liquidity above the market. So you hear me say this stuff, but you always got to think, if I'm not there, I'm looking at that level and that level. And if they give way, that level there, if they give way to the upside, then I go, I'm looking for my bear trap or my bull trap to hold price to come lower, or if it pops up above, then I'm right back into it, going long again, getting back in sync with the market. As soon as it takes that level, I'm back in sync with going higher. Okay. So let's look at is the all drawn out there? Good, it didn't. So you get to see that there. Now, is there anything specific you guys want me to look at? That was going to be my quick little spiel on NASDAQ. If I look at oil, jeepers creepers, that looks terrible. I get nothing in oil. It looks terrible. Look at those wicks. Those wicks will fry your noggin. They come down to a perfect level we're looking for. Like, look at that imbalance right there. That little volume imbalance. Look at the times it gets worked. But look at the wicks. Like, holy crap. That's a ton of damage. I'm not giving any advice on that. It just looks like there. That's your upside objective for 4-hour. I'll give you a 4-hour for oil. It's this one here, this one here, and that one there. So include them all. That would be the upside objective I'd be looking for. And look at it. I didn't line that up. I looked for that spot right there. See that little imbalance? I would take that imbalance plus this, and I would take all of this right to there. And I would say that is an area I would expect to see some sort of, it's the same equivalent of the NASDAQ we were looking at. The NASDAQ's go, no go zone. No go, no go line. That's right there. The go, no go line, looking for continuation. So if we close above that, look for this to fill. But that level right there that I drew out right there wasn't form fit. See how it trades below it, comes back, taps it, and then goes lower. That's oil, 4 hour. Beautiful. I bet you're not looking at your charts, cutting through all these candles and looking at that back there. But that's exactly what I'd be looking for. Because it's, why do I look at this one and not this one, or this one here? Why did I pick this one? Because it's the lowest. It's the first one you're going to encounter. It's the first one you're going to encounter. And when you eat through that one, look at the next one, and then the next one. Just work your way back up through that. That's my secret to looking for that perfect level. Bitcoin, yes, I will do that. I'll leave that there. Bitcoin. Let's have a look at Bitcoin. Let's start with the daily of Bitcoin. Bitcoin. I don't know why I keep wrestling with it when it's at that small level. And that is right inside this guy. So we have swept the low. We've got the change in direction. We've traded above it. We've come all the way back. We've revisited it. Now I'm expecting to see price continue to push higher. So I'd want to see Bitcoin reach up it into this level, and we're between this one and this one. This is your premium box. This is your discount box. If we get above this level, look for the bodies opens and closes here, the close of that, the open of this. And then I want to see it eat through this mean threshold, find some support at that, and start digging into this large up close candle here. So I'd expect to see Bitcoin hold here now and go higher. If it doesn't, if all we've done now is just retrace back into this breaker that takes out all this long, if we take this, well, it's not really a breaker because it's just more of a propulsion candle because we don't have a swing point here. This propulsion candle, if we get back and that propulsion candle's mean threshold holds price, you want to see it break through here. So right now I'd be bullish. I'd be looking for, again, like we did in NASDAQ, I'm looking for, I've got a higher time frame area I'd like to see sensitivity at. Now I'm going to look for the 4 hour, the 1 hour, the 15-minute to see if we're in a confirmation that we're going higher. So you go down into a 4 hour chart. And what is on our 4 hour chart that tells me we're going to go higher? Right here. So we have a market structure shift. We run above that market structure. We create this fair value gap. We have our graded response. The high has been taken. We have a graded response. Institutional order flow entry drill would have been nice there, but it started just to leave right away, right? Then it reversed, came back for past the institutional order flow entry drill for the first 25%. Then it kept coming lower. So it goes right now. I'm looking right here. And it's bounced. Bodies froze right on that. See that? And now you want to see a 1 hour, a 15-minute reversal going on here because now I've got a bounce off of a daily and a 4 hour level that supports price. So now I'm looking for an hourly candle that supports this is a turning point, and a 15-minute and a 5-minute to show me that we're heading back up inside this range. And then when we get back above that rejection block, get up on top of that, I'm looking for higher prices. Okay, so here's your hourly candle. We finally broke above here, and if we come back into our key levels, And do our quarters. There's 75% there. We're above 50. We've hit right into our level that we wanted. And now if we take this right here, I want you to see this right there. So I'm taking the candle body. Right. Those two little candles right there. If you take the last candle itself, you take the body right there, 50% of it, and then leave. This is a nice little indication we want to go higher. I want to see that hour now, close above here, use this as support, and I want to see that keep going higher, and you're looking for this confirmation, so on and so forth. So now you look for a 15-minute chart of the same kind of thing. Well, look what we got right here. I got a 15-minute city right here. So now we've gone down from a daily, turning at a point, 4-hour, turning at a point, a 1-hour, turning at a point, now a 15-minute, turning at a point right here. We went above, then we went below. So you go, nope, that's not what I wanted to see. I wanted to see that candle stop and then go higher. It didn't, it went there. So now what do? You say, I wait for market structure shift. I wait for it to break below this low or break below that high to tell me, are you sneaking down and going a little lower, or are we starting to push higher? It broke that high right there. It came back into, what are we looking at again? You can take both of them or just that last closed candle and just pull that right out there. 50%, right on the money. The bodies respect it, and then we start going higher. So now we've got a daily, a 4-hour, a 1-hour, and now a 15-minute confirmation that we're coming back higher. Okay, so let's go to a 5-minute. And do they all agree? So we've got a 5-minute right here. We also have this first presentation 5-minute fair value gap. We have an immediate, well, we have immediate rebalance. We have a gap here and a gap here. That was pretty much that 15-minute one we're looking at. You're going to include that all the way down to there. Pull it out. Inside that, 50%. We're still inside that very first candle's wick. We're just like one tick below it. Come back to this old high, go higher, take that high, come back inside those 3 candles. And now we're slightly below here on a 5-minute chart. So we're below this level. I want to see us close above that level, take that candle, and continue to push for the next objective, then the next objective, and just start hunting for those premium boxes. So 5 minutes still tells me we're bullish above this breaker. That breaker, all the time that breaker's holding, we're going higher. So that's how you zero in from daily all the way down to a 5-minute chart, all telling me that that area that we've got right there looks like an area of support to go higher. So then you go back to your daily again and you say, what's my upside objective? My first upside objective is this old candle here. It's low, the wick, the body, we lose the mean threshold. Then I'm looking for that next upside objective there. So you're thinking, if this was my turning point, my stop loss can sit like right below the low of that. And I can just wait for my first opportunity on that 5-minute chart to enter it to go along. Does that make sense? And if it trades back through it, if it suddenly gaps below it, then all bets are off. Forget that whole idea. Look for the mean threshold of this candle. It's a retest of this, or pushing through to the very bottom of that one more time. But right now, I see nothing but bullishness from that one little point there all the way down to a 5-minute chart that supports it. Dickie's back. Appreciate it, D. You're welcome, Liquid. Hans, is Bitcoin different from index? it did not reach 50% of the last swing in the 1 hour. It's not different. It's exactly the same if it's running algorithmically. So if we haven't hit that hourly, let's go to an hourly chart here. So what does that tell you then? If we do not retrace, into, like you're saying, why didn't we hit 50%? We're super close to hitting it. Oh no, we hit it right there. That's 50% of that hourly range. From there to there, there's 50%. You hit it right inside the mean threshold of this last down close candle. Oops, let me undo that. Okay, so there's 50% with just like maybe a fraction and not touched it. So if you'd seen it leave and it breaks above that hourly level, find support of that, then that just shows you got more strength than weakness, right? Because you're just, this breaker's holding price and it's going higher. So this just tells me it's going higher from that point. If that makes any sense, Hans. I didn't know you go live on Saturdays. I don't. I was in the mood for doing an analysis this morning, so or this afternoon. I got to get going soon anyway because I'm going to a football game. So, anything else you guys want me to look at before I call her quits today? Can you check out NIO for me? NIO. I can do that. NIO. NIO. Where's that other? Okay, cool. NIO. Is it NIO or N0 something? NIO. This one? Just give me a quick yes or no. Okay. Let's have a look at this. Ooh, you're late to the party, man. You're late to the party. If you break it down from the July, this is the small range that you're in. You want to see a price break this level on a close. And it does right here. Now, if you can come back and tap it and catch it for a run higher, you catch it for a run higher. In this case, you don't get a chance to get it, so you look for the premium box up here. If you can get through the premium box on a close, it's the same thing we teach every morning. You look for, this is a daily chart. We can get a trade back up inside that or above that. Before you take that high, right there, you come back into it. Look at the bodies respect it. You get a bit of a wick, but the bodies respect that, and you just go, sweet. Now I've caught that as a run, and right there, you catch the run. As soon as it takes that high, you pay yourself. Okay, so you pay yourself, and then just wait for the next premium box, which is sitting right here. And if you close above that, which it does, then you say, pay yourself, and wait for the rejection block. It trades back through this level. You go, ooh, now look for a retest on the old high or this level back here one more time. Because now you're inside this small range from this swing to that high. So if you pull your fib tool on it, so you always have to pull your fib tool on these ranges, right? You'd allow it to get back to 50%. There's 62, body's respecting it. Comes right back in, taps this old high inside this range. You've traded below it. So now what you're going to wait. So if it gets back through it, like right there, then it goes back below it. What did we say? You wait for market structure shifts. You got to wait for a couple of days. You want to see it get back through here or get down below here. So you got to wait. It gets back through there, gaps up, and you wouldn't have caught the rest of that. That would have been it took off on you. This would have been the only indication right here that you could have caught that. And you would have had to be pretty savvy on the ball right there. See how you gapped above it, come down, tap it, and go higher. But see how you've done that? You've traded above it, so you want to see it come into it and go higher. It didn't. It went lower. Then all of a sudden it went higher and you go, okay, now I'm going to get it. Oh no, it went lower. Oh, shit. Now that's that whole idea. I tell you, if you lose it once, don't go back and forth into it. And if you lose the trade, you lose the trade. You miss it. Who cares? Big deal. You paid yourself on the way up. You made some money here. No big deal. If you miss it, you miss it. But right there, if you would have just kept going in and out of it, in and out of it, eventually you would have hit it here, and you would have been huge run up. But my advice is anytime it trades back through that level once and then trades through it again, wait, take the loss, move to the sidelines, and wait for market structure shift. There's your market structure shift right there. You wanted to see one little wick come back and tap that, you could have caught that for a beautiful run, but it did not wick down into there, so you didn't catch the run. Now you could say, here's where I anticipate price might go. If I did from there to there, and then from here to there, that would be the next price leg higher, and you've already broken that price leg run higher. So then you go to this kind of thing. Do this. I would take from here to here, and then I would do a standard deviation 1, there's a 2 right there. So I would anticipate looking for price to get up into here at least. It's 2, and then 2.5, then 3. But don't chase this. I wouldn't chase that. It's gone. I'll leave that there just because we'll reference that when we start on Monday as well. I got it in July, but I like long term. Yeah, well, if you like it long term and you got that July, you got a sweet trade there, man. Let her buck. Let her buck. Do I think it can reach $35? No, $8.57. That would be a 4-banger for me. There's no way you can predict $35 on that. Unless you're a fundamental guy who really buys into that fundamental stuff. Has it ever been $35? Yeah, it's been up there. Let's look at a weekly chart and see what you have on a weekly chart. Wow, yeah. Back in the day, she was a fancy stock, hey? And she did that little dead cat bounce on you. Yeesh. So that's a nice little pump up. So where does that put us? Look at this on the weekly chart. Let's take our weekly objective right here, there to there. You're right up inside the weekly objective. If you can get up on top of this and find support at it, look for that high, and then I'd look for these objectives up here. As weekly objectives. So if that weekly holds and that rolls over and comes back down again, look for a retag of this. Like what I'd like to see here for you, Dickie, is a fair value gap to form here. Like next week to kind of just roll up here, hit this level, stop, come back, freeze in here, and then you get a graded response. Come back into 50% of this. Tap that old high right there, leave this portion open, and then if it's gunning higher, look, gun for that high there. Take the mean threshold, then the high, and then look for the next objective above you, which is the next premium array here. You got to get support on top of here, though, from a weekly perspective if you're a long-term holder. This candle looks really good now as a support level for me. So I'll be looking for it right there. Watch there. You're still in ZM long-term too. Good for you. Okay, anybody else got anything they want me to look at? I'm going to keep an eye on that for you as well. Dickie, I want to see if we get the little run there. I'll leave this projection on too. Anybody else have anything else they want me to look at? All right. Okay, well, that's it for me. Well, that's my little analysis for the week. Let's have a look at gold. I'll quickly look at gold here. Let's look at gold's hourly. Yes, look at that. Holy. I'm looking for gold to get back into here. Let's get all this stuff out of here. Just clear up my charts, remove everything. Let's get started from scratch here. What is there? Today. Oops. Okay, that's the downside. I'm looking for to see if price will hold here. That'll give you these old highs. That'll give you this candle, and it will put you right near the mean threshold of this. It'll keep you inside this premium or this SIBI-BISI overlap. And then you want to see if that keeps pushing higher. You got lots of upside objectives here. Okay, yeah, that's it for me. So I'll see you guys on Monday. You guys have an awesome weekend, and I wish you all the best. Be safe out there. Thank you for tuning in, and I'll see you on Monday.